Good afternoon. My name is Josh Mindlin here at Chaikin Analytics, and I'd like to welcome you to Profit from Process, How to Ignore the Headlines and Thrive in a Volatile Market. Our presenter today is Dan Russo, Chief Market Strategist at Chaikin Analytics. Be sure to submit your questions through the webinar through the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. I will be available to respond to your questions. This webinar is being recorded, and a replay will be sent to all registrants. Dan Russo is the Chief Market Strategist at Chaikin Analytics, where he writes the Daily Market Insights newsletter and provides thematic trading and investment ideas for clients. Prior to joining Chaikin Analytics, Dan was an institutional sales professional at Needham & Company, where he combined the firm's fundamental analysis research with his own technical analysis to generate actionable trading ideas for hedge fund clients. Before joining Needham, Dan worked in an institutional sales role at Susquehanna International Group. Dan started his trading career as a specialist and member at the New York Stock Exchange, responsible for maintaining markets in domestic equities, U.S.-listed foreign equities, and closed-end funds. Dan is a chartered market technician and a member of the CMT Association. To get us started, here is Dan Russo.
All right, thank you, Josh, and thank you everybody for listening today. Really appreciate the warm intro. So yeah, we're going to go through my process for picking ideas on both the long side of the market and the short side of the market, and kind of focus in on that process to help you ignore the headlines, ignore kind of your emotional biases, and thrive in a volatile market. So just want to briefly show you our disclaimer before we get underway. Chaikin Analytics is not as registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. So as Josh said, my name is Dan Russo. I am a chartered market technician. I've been on the street for about 18 years in the various roles that Josh mentioned. I am also the co-chair of the New York chapter of the CMT Association, and I spent 10 years covering large institutional investors prior to joining Chaikin Analytics. So think hedge funds, mutual funds, and pension funds, many of which you've probably heard of if you've been investing for any length of time. And for me, what really kind of drew me to Chaikin Analytics and where it all starts is with the power gauge. The power gauge is a 20-factor model that incorporates financials, earnings, technicals, as well as expert/sentiment data to give a rating to U.S. listed stocks. And that rating runs from very bullish to neutral to bearish to very bearish. And it's a clear, tested summary of a stock's potential. It kind of helps you know where a stock is headed. And just for some background, the model is 85% fundamental and 15% technical. And that's interesting to me because, like I said, I covered institutional investors. These guys are predominantly fundamental analysts, and on a daily basis, these 20 factors that we're showing you on the screen here, this is what they are analyzing. Those investors, the professional investors, are analyzing on a daily basis. They're building big, complex models to try to figure out where a stock is going. Chaikin Analytics and the Power Gauge, we distill that down for you and give you the tools that you need to find winning stocks on the long side, as well as stocks that are likely to underperform or go down on the sell side or the short side of the market. So really what it does is it cuts through the clutter. Like, as I said, I've seen so many investors spend a ton of time reading news articles, looking at financial statements, and it's really to no avail. Some of my former clients, they would build these massive Excel models, multi-tab and multi-page spreadsheets to try to give them some sort of edge. And it's kind of to no avail because our emotions as investors tend to take over. And once that happens, it's hard to make objective, rational decisions about where a stock is going. And that's why a quantitative objective model is so powerful. You can eliminate those biases. And a lot of those biases tend to be driven by what you just read in the headlines or the president's latest tweet. We want to ignore that and just focus on the factors that drive stock. And the Chaikin Power Gauge and Chaikin Analytics can really help you do that. And John Carter, he's the CEO and the president of Simpler Trading, somebody you may have heard of. He's a well-known technical analyst, and his comment was, I like that it includes fundamental and technical analysis for stock selection and timing. He called the power gauge an objective awesome meter for stocks. Why does a technical analyst like John Carter or myself, why drawn to a model that's 85% fundamentals? Because fundamentals drive the market. At the end of the day, the fundamentals do matter. They are what drive a stock's performance over the intermediate to long term, but our emotions and the emotions of other investors drive the market to extremes. So the path to profits is a combination of the two. Combine fundamental work, 85% of the model, with technical work, 15% of the model, to isolate winning stocks on the long side and the short side. And this is what I did for my clients when I was on an institutional sales desk. I had a team of research analysts who were performing fundamental analysis, and I would combine their work with my own technical analysis to generate ideas for my clients. But, again, the human analysts, myself included, we're emotional, we're biased, and, Chaikin Analytics is going to help you remove that bias via our 20-factor model that simplifies the process. And, really the performance of the model kind of speaks for itself. And this was amazing to me when I saw it, when I joined here, on data going back to 1999 and updated through the end of 2017, you can see our very bullish stocks, 20% annualized return. Our bullish stocks, nearly 12.5% annualized return. That's against the Russell 3000 cap weighted at under 6.5% on an equal weighted basis over that time frame. The Russell has returned about 9%. So Chaikin Power Gauge helps you isolate and whittle down the universe, a universe of 3,000 stocks, to find the ones that you want to be owning on the long side. And more importantly, or just as important, are the statistics for our bearish and very bearish stocks. They underperform the market massively, and these are the stocks that you want to avoid. These are your portfolio killers. These are names that if you own them and the rating turns bearish, you want to get them out of the portfolio, because you want to be in that very bullish bucket that's outperforming the market by 10.5% on an annual basis. That is massive outperformance, just as a 1.1% return for our very bearish stocks is massive underperformance. We're going to walk through my process today of finding ideas on both the long and the short side. And really, it all starts with the power gauge, right? Because if I'm looking for long ideas, I know I want to be fishing in this bucket right here, the very bullish stocks and the bullish stocks. And I want to avoid the very bearish stocks and the bearish stocks for my long ideas. So, to kind of validate the model a little bit further, the performance has been actually rolled up with the launch of 2 ETFs, which are listed on the NASDAQ. And between the two of them, they have about $1 billion in assets under management. And, the team at Chaikin Analytics rang the opening bell at the NASDAQ back on April 30th. The power gauge, you can see it here, was above the streets of Times Square. Really just kind of a good validation of the model to show you that, this model works when applied in a systematic, kind of process-driven way. So what do we want to focus on for the balance of 2018? I've really separated these 4 items into 2 buckets. The trend of corporate earnings and interest rates are what I'll call kind of the big picture, fundamental, thematic, macro themes. The trend in corporate earnings is strong, right? First quarter was a record quarter for earnings. Analysts are projecting 20% earnings growth for the second quarter. So, the trend in corporate earnings remains strong. As we said, fundamentals drive the market. Interest rates are likely heading higher. Some in the news media are going to try to get you concerned about that. They're going to tell you rising rates are bad for stocks. I've done the work actually, and I've done it for our members in my morning note. Rising interest rates are not a negative for the stock market until we get to about 5%. The 10-year yield currently just under 2.9%, heading towards 3%, 3.5%. That is not a reason for concern in and of itself for stock prices, especially in light of the fact that the reason rates are going higher is because of strength in the economy. So with that in mind, now we're going to move to the technical side of the equation. We want to focus on sector and group strength and weakness to isolate the best stocks to own on the long side and the stocks to avoid or potentially look at as short candidates within a stock selection process that that I walk through on a daily basis and that you could utilize with Chaikin Analytics. So as I said, the likely scenario is actually a bullish one, big picture for the remainder of 2018. This chart, courtesy of Bank of America, Merrill Lynch Investment Strategy Group. And what they're looking for, and it lines up with our views, is higher rates driven by a strong economy, as well as rising earnings. And we can see that that's kind of on the bullish side of the line. So the big picture macro, call it the regime for the market, is bullish in nature, and that is our view. But something that has happened here in 2018 is volatility has returned to normal. What does that mean? That means it is now a stock picker's market again. And when you turn on the news, they're gonna quote the volatility index or the VIX and tell you how it spiked in January, and that was bad for the market. Well, we've quickly normalized since then, and the green line here shows you a 2-year regression, and you can see we're back to the norm. What jumps out at me is that 2017 was the anomaly. The subdued levels of 2017, the market just kind of going up in a straight line. I actually have to tell you, that made it extremely difficult for my former clients to outperform. A lot of the folks that I spoke to and that I covered in 2017, they did not outperform the market just because of the steady grind higher and the low volatility. But when I speak to them now, I still keep in contact with a lot of them. 2018 is the best year that they're having within the past 5 years. Why is that? Because volatility's return to a normal level has now turned this into a stock picker's market. And those are exactly the kind of tools that we can help with here at Chaikin Analytics. So how? My process is a simple one. With a return to the stock picker's market, my process boils down to, number one, volatility equals opportunity. And we're going to exploit that opportunity by buying bullish power gauge stocks when they're oversold and selling bearish power gauge stocks when they're overbought. And we're going to use our signals, and these are proprietary to Chaikin Analytics, to enhance our performance and help us with our entries and our exits. So before we move a little further, here's kind of big picture. This is the SPY, the ETF that replicates the S&P 500, and you can see the choppy trading since the January highs. I mean, this is that return of volatility, swinging intraday and really not making a ton of progress. But within that, there are big winners and big losers at the stock level, and we're going to try to give you the tools to find them. Overall, bigger picture, I think ultimately my view is that this consolidation is happening within the context of a secular uptrend, and it's likely to resolve to the upside. So there's definitely a bullish skew to my view, but there are opportunities to make money on both sides of the market using the process that I'm going to lay out for you. And another reason for the increased volatility is that really headlines are driving the market, whether it's President Trump's latest tweet, headlines about trade wars, President Trump assails NATO members the day before a summit. Everybody, we're starting earnings season now. Our tech and energy companies could, put up blowout numbers. These headlines are designed to play on your emotions and to get you to not think rationally. They're there to get you to, click and read an article to sell ads. We're here to isolate the best stocks in the best parts of the market for long ideas and the worst stocks in the worst parts of the market for short ideas. And the way to do that is you have to have a process. And right now, these are the tools right here on this screen. These are the building blocks for my process. Like I said, I write a daily note. I have to pick a stock every day. So if I don't have a process, it's going to be extremely difficult for me to find winners on the long side and the short side. And right now, what I'm going to do today is kind of show you those building blocks and basically kind of take you over my shoulder and show you what I do every morning as I write my note for our members to pick a stock and come up with ideas. At the top of the pyramid, as I said, is the power gauge, right? For long ideas, we want bullish and very bullish stocks. For short ideas, we want bearish and very bearish stocks. And we want to isolate the stocks that are in the strongest industry groups. From there, we want to utilize our proprietary, you're not going to find these anywhere else, proprietary Chaikin buy and sell signals to optimize our entries and exits, and we're going to use those in conjunction with Chaikin money flow. It's the indicator that Mark Chaikin is probably most well known for. I had to study it and memorize the formula to become a CMT. It was part of the curriculum to become a chartered market technician, and something that we look at called the Chaikin relative strength. So let's kind of dive right in now to what I like to call my top-down approach to finding stocks on the long and short side. This is a screen that was taken from Chaikin Analytics, and what it shows you here are the main sectors of the S&P 500. And really what I want to draw your attention to are these power bars. The power bar, again, is a proprietary IP to Chaikin Analytics. It tells us in the green how many stocks in each sector, and we can do this for industries and ETFs as well, have very bullish or bullish ratings, how many are neutral, and how many are bearish or very bearish. And that ratio is actually forward-looking and predictive of future returns. So when we're looking for long ideas, we know we want to be hunting in the areas of the market that have a bullish ratio, i.e. more bullish or very bullish stocks than bearish or very bearish stocks, and that are outperforming the S&P 500 on that metric. And we can see here, it's an eclectic group because you have two high growth aggressive areas like healthcare and technology, and two defensive areas like real estate and utilities. That's what the model tells us. That's what's forward looking. So when we're looking for long ideas, these are the areas where we want to hunt for long ideas. And on the flip side, these are the areas that we want to avoid. These are the sectors that have power bar ratios which are skewed to the bearish side. In addition, they're underperforming the S&P 500. So if we've isolated what the market's doing, right? The market is consolidating. Our view is that it's consolidating within the context of a secular uptrend. Take it a step further. We want to isolate the strongest sectors of the market to try to find which ones are likely to outperform going forward. Our power bar is predictive. It can help you do that. And we want to avoid the sectors of the market that are likely to underperform going forward. So again, that's how we're using the power bar. So the second best performing group on the list right here is healthcare, and here's the XLV, the Healthcare Select Sector Spider ETF. What's interesting to me here is since May, we've been seeing a constant improvement in performance relative to the SPY. This group is beginning to become leadership at the sector level. Our proprietary overbought, oversold indicator is currently closer to oversold conditions than it is to overbought conditions. And we can see that at a price basis, it's breaking out. And here's what's interesting. Money flow is bullish. This tells us Chaikin money flow measures institutional accumulation and distribution. And money flow here, we can see the persistent green since early May tells us that even as the fund was moving sideways, institutional investors were putting money to work on the long side in the group. So what does that tell you? That tells you that this is a sector where you want to go hunting for long ideas within your portfolio or for your trading. But we have to take it a step further because there are winners and losers within the sectors. And Chaikin Analytics lets you kind of get below the surface. It's not enough to just know that healthcare is outperforming. We want to drill down and find the best industry groups within the healthcare sector. And this is similarly done with our power bars. These are the power bars at the industry level. And what I've highlighted here with these black arrows is that 2 of the top 4 performing industry groups are within healthcare. They're healthcare services and healthcare equipment. Notice at the bottom of the screen, pharmaceuticals, not a group we want to focus on, right? Year to date, it's up 2%. It's lagging the S&P 500. Services are up over 15%. Healthcare equipment are up over 25%. So within healthcare, a leading sector, we want to isolate the leading industry groups. And from there, we can put the process into action for stock selection. And I'm just going to run through a couple of ideas that I've highlighted recently for Chaikin Analytics members. Here's LHCG, LHC Group. We can see at the top of the screen, it has a bullish power gauge rating. It's a strong trend within a strong industry. The power at the bottom of the screen is the ribbon. This ribbon tells us where the power gauge has been over the course of the past 12 months. And then we can see in early April, it turned to that bullish rating. And just as importantly, and we'll get to this a little further down the line, at that time, it began to outperform relative to the SPY. So that all of that rolled up kind of tells us that LHCG is the type of stock that we want to own. We want to be keeping an eye on this. From there, we can utilize the tools in Chaikin Analytics to figure out when we want to own it. And how do we do that? First, our proprietary overbought, oversold indicator registered an oversold reading in May. At the same time that it was registering that oversold reading, similar to the sector level, Chaikin money flow remained bullish. Institutional investors were using this weakness to build positions in this stock. One of our proprietary signals was triggered as well. It's called an oversold buy signal. It was triggered right in front of the company reporting earnings. I highlighted this stock to Chaikin Analytics members at around the $70 level, and after earnings, it's run to over $85 and it's trading over $85 on Monday afternoon. So it was just one example of kind of using that process, that top-down process to isolate a winning stock. But what's great about Chaikin Analytics and utilizing the process is it's repeatable. Here's ATRC, ticker ATRC. Again, a bullish stock with strong trends in a strong industry group tells us that this is the type of stock that we want to own. The power bar, the ribbon at the bottom, tells us where the power gauge has been over the past 12 months, and we can see that in the March-April timeframe, it was on that bullish rating. Stock subsequently began to outperform relative to the market. So now we know this is a name we want to keep an eye on. Again, our proprietary overbought, oversold indicator drops into an oversold condition, but Chaikin money flow remains bullish. The sideways action here was actually utilized by institutional investors to begin to build positions. One of our signals, this one a reversal buy signal, was triggered around the $20 level, at which point I highlighted this stock in my morning note to members of Chaikin Analytics, and the stock subsequently went on a great run, ticked over $30 before kind of pulling back and consolidating at the $28 level. And here's what's really interesting is the stock has now become oversold again. So we can repeat this process, right? We have a bullish rating. We have a stock that's outperforming the market. It's oversold with bullish money flow. This is a name we probably want to keep an eye on when one of our signals triggers, probably worth highlighting again as a long idea. And this is just an example now of why you couldn't just pick a stock within healthcare, why the tools within Chaikin Analytics helped you isolate the best industries to go hunting for the long ideas, because here's Acadia Pharma. It's a drug stock within that pharmaceutical group that I said we wanted to avoid. If you just looked at healthcare, you might have bought Acadia, but drilling down and utilizing the process and using Chaikin Analytics, you would have realized Acadia is a very bearish stock, weak trend in a weak industry, and it began to underperform the market back in November with this earnings print here. And subsequently, along the way, while it continued to underperform the market, money flow was predominantly bearish, a sign that institutional investors were using any strength to sell the stock. And along the way, you had 1, 2 of our overbought sell signals to kind of tell you if you own this stock, you want to get it out of the portfolio. And if you're an investor who looks for short ideas, this was an opportunity to open a position on the short side right in front of an earnings print and a gap down, and the stock has continued to go sideways. And again, we have one of those signals active right now. We have a very bearish stock that's underperforming the market, that has become overbought and triggered a sell signal. Acadia is a name that you definitely want to avoid. And what's interesting here as well is that the model is robust across industries. And I'm highlighting the consumer discretionary group here because back at the end of 2017, the hype in the media was that consumer discretionary, and in particular retail, was being decimated by the internet, right? There was even an ETF that was launched at the end of last year that played on the theme of the death of retail. They have a witty ticker symbol called EMTY for empty, i.e. the stores are empty. And what's amazing is while those headlines were out there and while that ETF was being launched, this group began to outperform relative to the market. And that outperformance was driven by what I like to call the retail renaissance. This is the SPDR S&P Retail ETF, ticker symbol XRT. And the arrow shows you the same exact thing that you saw on the previous chart. This industry group began to outperform the market in December, right when that ETF was being launched. During the holiday shopping season, when every headline you saw was the death of retail, and the financial media was showing you malls and trying to convince you that they were empty because everybody was shopping on Amazon. And I did a spot for Bloomberg TV at the time where they wanted to discuss retail stocks and the technicals. It was the day before Thanksgiving, so we wanted to talk about the holiday shopping season. And my call at the time was, the short retail trade is extremely crowded, and sentiment driven by the media has become extremely negative. Most of my clients at the time were long Amazon and short the retailers, the brick and mortar retailers. And what I said at the time was, I want to unwind that short and go long the retailers. And subsequently, since joining Chaikin Analytics, I've kind of dubbed that the retail renaissance. And you can see here, the group has been outperforming, starting in December and for all of 2018. And one of the real indicative names there is, one that we've all heard of, Macys, right? Again, same thing. Began to outperform the market in December, right as the death of retail ETF was being launched. And all along the way, you were given buy signals, these relative strength buy signals. And, the stock had a bullish rating, was outperforming the market. So I highlighted it to our members as a long idea around the $28 level right before they were due to report earnings. Why? Did I have any kind of read on earnings? No. Was I sitting there with one of those big complex models that I referenced earlier? Absolutely not. I used the Chaikin Power Gauge, which had a bullish rating, and I saw that Macys has been outperforming the market since December. Our overbought, oversold indicator moved to an oversold condition while Chaikin money flow remained bullish. So institutions were accumulating the stock. Our signal triggered. We highlighted it as a long idea to our members at $29 right before a run to 40. Subsequently pulled back to $36 here. But you can see that by going through the process, by simplifying the complex, we were able to isolate this idea for our members. So you've heard me talk a lot about the power gauge. But the real power comes from using it in conjunction with Chaikin relative strength. Every chart I've showed you so far, I've commented on the fact that for a long idea, it's been outperforming the market. And for a short idea, it's been underperforming the market. We like to call this the dynamic duo. It helps you find big winners as well as big losers, because superior returns come from stocks that are outperforming the market for long ideas and stocks that are underperforming the market for short ideas. And here's something that that I learned through my 10 years covering institutional investors, is that mutual fund managers are measured on relative performance. They need to outperform their relative benchmark. In most cases, it's the S&P 500. And how are they going to do that? By being overweight the stocks or being long the stocks that are leading the market, and being underweight or short the stocks that are lagging the market. So the Chaikin power rating in conjunction with Chaikin relative strength really is a powerful combination. When they're in gear, I like to say that the market is in agreement with the model. We call it the dynamic duo. It's powerful for finding ideas. Putting that theory to work, software, a theme within the technology group is that software is taking over the world. Here's the XSW, the S&P software ETF, and here's that relative strength at play. Began outperforming the market in January. What's interesting here is that as the market was topping, this group was leading the way. Why is that important? Because as the market consolidates, the stocks and the industry groups and the sectors that hold up the best, that outperform throughout that consolidation, those are likely going to be your winners when the market emerges from the consolidation, if it emerges to the upside. And we can see Chaikin money flow has been predominantly bullish since that outperformance began. Our sign that institutional investors are coming to the group, and we can see it too at the stock level. The process in action, once again, with a stock called Blucora. They do business services software. Has a very bullish Chaikin power gauge rating, a strong trend within a strong industry. Back in early March, it began to outperform the market. However, the model was not yet on that very bullish rating. So the market and the model were not agreeing with each other. However, about a month later, in early to mid-April, the model turned very bullish. So now I knew that this was a stock I had to pay attention to. I put it on a watch list and monitored it every day, because I have to put a stock out for our members every day. When it became oversold, I noticed that it also triggered an oversold buy signal, and it became oversold while money flow remained bullish. So I highlighted this as a stock idea to our members 3 days before they reported earnings at around $25. The stock subsequently went on a 50% plus run. It's now hovering just under the $40 level. So another example of the process, the process in action. Proficient, computer software and services company, right? So we know that that's a leading industry group within a leading sector. Proficient has a bullish Chaikin power gauge rating, a strong trend in a strong industry, began outperforming the market in March. We waited for an oversold condition and one of our signals, a relative strength buy signal in this case, while Chaikin money flow remained bullish, highlighted it to investors around $22, stock currently trading at around $26, about $1 off the high that it achieved of $27. Here's a recent example of the process in action. Travelport, ticker TVPT. It's an internet software company for travel. I highlighted this to members on last Monday, so a little over a week ago, and the process was the same. A very bullish power gauge rating. Stock started to outperform the market in late March, became oversold, and triggered our relative strength buy signal while Chaikin money flow was bullish. So at $18, I made it my stock of the day in my morning Insights newsletter, and over the course of the next kind of 5 trading days, we went over $20. So a nice run there just by following the process, by finding a strong stock and a strong industry group. So I get asked a lot of time, Dan, what do I have to do to find these ideas? Do I have to sit and go through thousands of charts to find these setups that you're looking for, to find that dynamic duo of the market being in agreement with our model and then waiting for the stock to become oversold? And the answer to that is no, right? I told you before that Chaikin Analytics can help you simplify the complex. Here is the screen that I run to look for ideas. I run this screen every morning before I write my note. What I'm trying to isolate are the strongest industry groups that have a very bullish Chaikin power gauge rating, with strong earnings consistency, because like I said, fundamentals drive the market, and one of the strongest fundamental factors is earnings consistency. So I want that to be strong. I look at relative strength versus the market, as well as industry relative strength. So that's everything that I've showed you of how to find a stock that you want to have your eye on as a long idea. And then comes the technical side of the equation. We want to find those stocks that meet all those criteria, but are also oversold, with high money flow persistency and high relative strength persistency. So now I've just taken a universe of nearly 5,000 US listed stocks and cut it to the 16 that present the most compelling opportunities currently. And here they are for you. And, you can see some of the financials on there, because financials had been leadership up to late, but now they've become oversold. So we want to look for the best names in that group. As a matter of fact, 2 of them triggered buy signals recently. And as well, you can see some software names on here. Right? Convergys is a software and services company. CyberArk, software and services company. So the chart that I just showed you of the ETF going up and to the right, here are the names that make sense to own. J2 Global, a name that you can own. So here's a simple way to screen for ideas using Chaikin Analytics. And you can change this screen to meet your process. I fully don't expect that every investor is going to have the exact same process that I have. You can customize these screens to fit your process. So I told you that we were going to look for names on the long side and the short side. And what's great about the program here is that you can just basically flip it on its head to look for short ideas. We're back to that screen now, where we look at the power bars at the sector level, and the sectors that we want to avoid are the ones that have a bearish ratio and are underperforming the S&P 500. And you can see the bottom 2 here, industrials and materials, are really where you want to focus. So additionally, consumer staples, they've been lagging all year, right? It wasn't just now that this flipped in. Our chart of the XLP, the Consumer Staples ETF, you can see at the bottom here, it's been lagging for the past 12 months. This is not a group where you've wanted to look for long ideas. In fact, it's a group where you've probably wanted to look for names to get out of the portfolio, or if you do short stocks, open positions on the short side. And I've been able to exploit this a few times here for our members. Like I said, the same process works in reverse. Here's Phillip Morris, a name that we all know. Hopefully we're not using their products, but look at all the red at the bottom of this screen. And as we walk through why this is a name that you wanted to short, or at the very least not own. Very bearish rating, weak trend in a weak industry. The ribbon at the bottom tells us where that rating has been over the past 12 months. And you can see that this stock has been lagging the market since August. So essentially, since August, that dynamic duo has been in gear to the downside, right? I highlighted it as a short idea to our members back in mid-April, 3 days before they reported earnings. Why? Because it had a very bearish rating, was underperforming the market, became overbought based on our overbought, oversold indicator, but that overbought condition was met with extremely bearish Chaikin money flow. That triggered an overbought sell signal within our system, which told me I want to highlight this as a short idea. 3 days later, they reported earnings. The stock gapped down $17 and has bled out ever since. So there's an example of the process being used in reverse. Colgate Palmolive, literally a household name. You have their products in your home. Another one that's been lagging the market for over a year. You can see here's the power gauge rating has been very bearish, underperforming the market. So we wait, becomes overbought with bearish money flow. It triggered our overbought sell signal. I highlighted it as a short idea at around $71 to our members. Stock subsequently started to collapse, reported earnings, collapsed further to around $61, so a 10-point gain on a short position in a little over a month. So, this is something that's interesting because you don't have to be in the weeds to know what's happening with earnings. You can utilize the process to isolate ideas in front of earnings for big winners. Here's one of our members, Mark, saying he's had 90% average return on his first 6 earnings trades using Chaikin Analytics. Additionally, within Chaikin Analytics, we have options play, which can help you generate some income. I realize that Phillip Morris is a household name. I realize that it's a name that's probably in a lot of people's portfolios, that, maybe you have a very low cost basis, and, it's a name that you've wanted to kind of put away and own for a long time. You've been told, this is the type of stock that you just buy and put away. Maybe I fully understand that. Chaikin Analytics has a tool that at the very least can protect you when that happens, and also generate some income. So, long-term holders of a name that turns bearish can use options play to find some income generating strategies, as well as protect your long position. So here's Phillip Morris. I basically asked our options play, what's the best way to generate income if I own this stock? And it told me to sell the August 3rd 87.5 call against the long position to generate income. As a matter of fact, the income that you generate from selling it, the premium that you receive, is about a 12-month projected yield of about 14%, and that's on top of the dividend that they pay. So here's an opportunity for you to at least protect yourself when the power gauge turns bearish. So we hear a lot about the trade wars and how industrials are the most exposed to the trade wars. Well, that's a relatively recent phenomena, and members of Chaikin Analytics have been avoiding the industrials group really since last August, right? You can look at the bottom of the screen and you can see that since last August, this group has been underperforming the market. Folks, it's not just the trade war. This has been a sector of the market that you've wanted to avoid for the better part of 11 months now. And, an example of that here is, again, just flipping the process on its head. Mohawk Industries, a very bearish stock, began underperforming the market in January. The model went to that very bearish rating in the April timeframe. Stock became overbought with bearish Chaikin money flow. It triggered an overbought sell signal, at which point I highlighted it to our members at around $240. Stock subsequently traded lower to 210. It's kind of gone sideways. Trade has kind of run its course at this point, but you can see how the process works in reverse. Another name that's, has exposure to trade wars that we highlighted here, Rockwell Automation. But notice this stock's been underperforming the market since late January. Model flipped to a very bearish rating in late January as well. We saw an opportunity here in mid-June when the stock became overbought and triggered a money flow sell signal. You can see here the bearish money flow. So institutional investors were using this strength from April to June to get out of positions in this stock. That set up a good opportunity to open on the short side at around $180. Stock subsequently traded off about 20 points to 160 before trying to lift its head here a bit. We highlighted technology earlier, and I'm just going to walk you through why you have to drill down to the industry level. Technology has been strong, but within tech, semis have underperformed. They've been underperforming, they underperformed from January through May. So within a strong group, we've wanted to own software and avoid semiconductors. And here's a semiconductor name, Ambarella. Started lagging the market in January. Model's been predominantly on a very bearish rating since that time frame. And in mid-April, we triggered a money flow sell signal. So we had a very bearish stock that was underperforming the market. It became overbought with bearish money flow, setting up an opportunity to open a position on the short side. Stock kind of went sideways for a little while, but then when they reported earnings, the stock gapped down. Could have been short the stock at around $50 before a move to below $40. So that's just how I walk through my process. I basically brought you in to my office to show you how I go through my process on a daily basis to find, winners on both sides of the market. And again, it all starts with the power gauge and using that power gauge in conjunction with a process to kind of conquer your emotions and the fears that are driven by the recent headlines. The power gauge gives you a directional edge by incorporating fundamentals and technicals into a quantitative model. And from there, you can utilize proprietary buy and sell signals, as well as our money flow and relative strength to find better entries and exit points. So really, this is Chaikin Analytics. It's a proven stock selection system that you can use to find winners on both sides of the market. Chaikin Analytics, the annual subscription is $2,195, $2,195 per year. And kind of let's recap what you get there. A 20-factor model that combines fundamentals and technicals, as well as something called the discovery engine. And this is really interesting. I actually love to use this tool. It helps you find other compelling ideas. Recall earlier, I highlighted Travelport as one that has a long idea. And maybe you take a look at that chart and you see it's gone in a straight line from $18 to $20. And you say to me, Dan, that stock's kind of run too far too fast. Are there other ideas like it? The discovery engine is like Netflix for stock selection. You seed it with one stock and it gives you examples, interestingly, on both sides of the market of other stocks like it. So if you feel like you missed Travelport, you can look at a name like Stamps.com with a very bullish power gauge rating, or you can look at a name like Expedia with a bullish power gauge rating. If you're looking for short ideas, you can look at Mercado Libre, MELI, with a very bearish Chaikin power gauge rating. And in addition, it gives you some similar ideas from different parts of the market, but that share factors in common. So you can look at HMS with a very bullish power gauge rating as a potential long idea for a name that's similar to Travelport. So you also get the screener, which I showed you for isolating ideas and trying to break down a 5,000 stock universe into something that's more manageable. We give you options ideas via options play. You can use those to generate income, or actually, take a position on the long side or the short side based on your work. Other additions include an intraday chart. We'll give you earnings details, highlight when a company is reporting and what the street is expecting, because earnings are part of those fundamentals, and fundamentals drive the market. And on top of that, you get Mark Chaikin's weekly newsletter. It comes out on Sunday afternoons. It's a great read to get you prepped for the week. A lot of high-level thoughts in there on the markets, as well as some great individual stock ideas utilizing his process. Plus, as a Chaikin member, you will get members-only access to our weekly strategy webinar, which I host, unlimited coaching and support, including these small group sessions, as well as one-on-one coaching with our client success team if you require it. And of course, you'll get my daily morning insights where I highlight these ideas and more from you on a daily basis, 5 days a week when the market's open. So as we said, Chaikin Analytics is normally $21.95 per year, but we're going to take $400 off that price today and offer a webinar special of $17.95 for the annual subscription. You can go to www.chaikinanalytics.com/profits, or you can contact our sales team, sales@chaikinanalytics.com. And in addition to that, our consultants are standing by on the phone. You can call if you're interested, 1-877-697-6783 for any follow-up questions that you may have. I really appreciate you taking the time. I really enjoyed kind of taking you through my work. And, as members, I'm always available as well. You can shoot an email to our team, and I'd be happy to answer your questions directly. Thank you, everyone, for joining. Have a great night.
Thank you, everybody, for joining. You can, as Dan said, take advantage of this offer by using the link, www.chaikinanalytics.com/profit. I've posted it in the chat window. You can access it there right now, or you can call us. We have people standing by, my colleagues standing by, that can answer any questions that you have, 877-697-6783. We can have you on one of our onboard sessions and up and running as early as tomorrow. We can get you in a one-on-one next week with one of our client success members into all of our member-only sessions. You get Dan's morning insights. Dan joins me for a session every week, so you have access to Dan as well. To take advantage of our offer, again, it is www.chaikinanalytics.com. It's in the /profits in the chat window now, or call us at 877-697-6783. Thank you all, and look forward to seeing you in the future.